Good morning, everyone, and thanks for joining us on today's episode of our daily crypto news podcast. I'm your host, and alongside me is our resident crypto expert. Today, we'll be diving into the latest market trends and analyzing the biggest stories that are moving the needle in the world of cryptocurrency.
That's right, we've got a jam-packed show for you today. The major theme we're seeing is the impact of the hawkish Fed on the crypto market. It seems like the initial worries of crypto traders have materialized, and we're seeing a significant shift in sentiment.
Let's start with the numbers. We're seeing that short-term Bitcoin puts are in high demand, and the 7-day puts are trading at the highest volatility premium since September. This is a clear indication that investors are getting nervous about the short-term prospects of the market.
That's right, the Fed's decision to pencil in just 2 rate cuts for 2024 versus the 4 that were projected in September has clearly had an impact on the market. We're seeing the call skew and longer duration options continue to weaken, which suggests that investors are becoming more bearish on the long-term prospects of the market.
And it's interesting to note that this shift in sentiment is coming at a time when some are arguing that it's time to retire the altcoin moniker and start thinking of crypto as a legitimate asset class. Max Fresha recently made this argument, pointing out that the headwinds that we're facing the crypto market have started to dissipate since the U.S. presidential election.
Yes, and we've seen some significant regulatory wins in recent weeks, including the nomination of crypto-friendly Paul Atkins to replace Gary Gensler as SEC chair. We've also seen the naming of crypto advocate David Sachs as the incoming White House AI and crypto czar. These developments have clearly had a positive impact on the market, with Bitcoin reaching $100,000 since early November.
So it seems like we have a bit of a paradox on our hands. On the one hand, the hawkish Fed is causing investors to become more bearish on the market. On the other hand, we're seeing significant regulatory wins that could potentially pave the way for further growth.
Exactly, and that's what we'll be exploring in more depth throughout this episode. We'll be taking a closer look at the implications of the hawkish Fed on the crypto market, as well as examining the potential benefits of treating crypto as a legitimate asset class. Stay tuned. It's going to be a fascinating discussion.
Building on what we discussed in our previous segment about the market's reaction to the Federal Reserve's rate cut hints, it seems like the crypto space is experiencing a significant downturn. Bitcoin's nosedive to under $100,000 has shaved off a staggering $700 million in crypto longs, with XRP dropping 5% and other major coins following suit.
That's right, and what's interesting to note is the unusually high liquidation numbers we're seeing in XRP and DOGE futures, with over $70 million in losses. This suggests a rise in speculative activity, particularly in the majors. It seems like investors are getting increasingly nervous about the market's direction.
And it's not just Bitcoin that's feeling the heat. Other major coins like BNB Chain's BNB and ETH are down 2.5%, while SOL has fallen as much as 5.5%. This slump is having a ripple effect across the entire market, leaving many investors wondering what's next.
Speaking of ripples, it's worth noting that this downturn is likely linked to the Federal Reserve's hints at rate cuts in 2025. As we discussed earlier, the market is highly sensitive to these kinds of announcements, and it seems like investors are pricing in the potential for reduced liquidity in the future.
And moving on to some more positive news, Europol has announced a major victory in its fight against crypto-enabled crime. The agency has seized $26 million in crypto from 9 drug traffickers, following a collaborative effort with law enforcement authorities from 6 countries.
That's a significant haul, and it's great to see international cooperation paying off in the fight against illicit activity in the crypto space. According to Europol, the operation targeted underground bankers who were using crypto to launder the proceeds of large-scale drug trafficking and other serious crimes.
It's worth noting that Europol has been tight-lipped about the details of the operation, citing the need for confidentiality in ongoing investigations. However, this announcement sends a clear message that law enforcement is taking a proactive stance against crypto-invadable crime, and that's a positive development for the industry as a whole.
Absolutely, and it's a reminder that the crypto space is not a lawless frontier. There are consequences for those who use crypto for illicit purposes, and it's reassuring to see authorities taking action to protect the integrity of the market.
As we continue to navigate the ups and downs of the crypto market, it's clear that there are many factors at play. From regulatory announcements to law enforcement actions, the landscape is constantly evolving. We'll be keeping a close eye on these developments and bringing you the latest news and analysis as it happens.
So we've been discussing the rise of institutional investment in crypto, particularly in the US, with the approval of several Bitcoin ETFs. But it's interesting to see how other regions are also embracing digital assets.
That's right. Building on what we discussed earlier, it seems that European investors are showing a strong appetite for crypto products. For instance, Bitwise just launched a Solana staking product in Germany, which will trade on the Deutsche Börse IG.
This is significant, especially since the SEC has yet to approve a Solana ETF in the US. It seems that asset managers are looking to capitalize on the demand from European investors, who are eager to tap into the potential of the sixth largest digital coin.
Exactly. The Bitwise Solana staking ETP allows investors to earn returns on their SOL holdings, which could be more attractive compared to other investment options. It's clear that the demand for Solana products is there, and asset managers are finding ways to meet that demand outside of the US.
Speaking of the future of crypto, I came across an interesting article that outlined 3 predictions for 2025. According to Marcin Kazmierzak, 2024 has been a pivotal year for crypto, but the real turning point is still to come.
I'm intrigued. What are these predictions and how do they align with what we've seen so far in the market?
Well, Kazmierzak mentions that the launch of BTC and ETH ETFs, BlackRock's Bitcoin adoption, and the election of a pro-crypto president have all been significant milestones. However, he believes that the inflection point for crypto is still ahead of us.
That's a bold statement. What are his predictions for 2025 and how do they relate to the current market trends?
Unfortunately, the article doesn't go into too much detail, but it does suggest that Kazmierzak's predictions could help ignite the next phase of growth for crypto. We'll have to keep an eye out for the full article to learn more.
Absolutely. It's always interesting to hear from experts and their predictions for the future of crypto. We'll be sure to follow up on this story and see how Kazmierzak's predictions play out in the coming year.
In the meantime, it's clear that the crypto market is continuing to evolve, with new products and investment opportunities emerging all the time. As we head into 2025, it will be exciting to see how these developments shape the future of the industry.
Agreed. We'll be keeping a close eye on these stories and more as we continue to bring you the latest news and updates from the world of crypto.
And as we were discussing in the previous segment, the U.S. regulatory landscape seems to be shifting in favor of crypto, and we're seeing major exchanges like Binance US gearing up for a comeback.
That's right, and we have some exciting news on that front. Binance US has just announced plans to restore its USD services in early 2025, which marks a significant operational shift for the exchange.
This is big news, especially considering the platform has been operating under restricted banking access since June 2023, when the SEC's civil claims forced them to suspend fiat trading.
Exactly, and it's clear that Binance US is capitalizing on the anticipated changes to US crypto policy. We've seen a lot of movement in this space lately, and it's going to be interesting to see how exchanges like Binance US adapt and evolve.
Speaking of evolution, another major exchange, Kraken, has just launched its Layer 2 network, called Inc. What can you tell us about this development?
Well, the team had originally planned for Inc. to go live in early 2025, but it looks like they've managed to get ahead of schedule. The blockchain is built with Optimism's OP stack, and Kraken has agreed to receive 25 million OP tokens in grants from the Optimism Foundation.
That's impressive, especially considering Kraken is the 7th largest crypto exchange. This launch could have significant implications for the industry as a whole.
Absolutely, and it's worth noting that Kraken's Inc. is built on the same technology as Optimism's Layer 2 network. This could lead to increased adoption and interoperability between different blockchain platforms.
Building on what we discussed earlier, it's clear that the regulatory environment is having a major impact on the development of these new technologies. As exchanges like Binance US and Kraken continue to innovate, it'll be interesting to see how regulators respond.
That's a great point, and it highlights the ongoing tension between innovation and regulation in the crypto space. As we move forward, it's likely that we'll see more exchanges and blockchain platforms navigating these complex regulatory waters.
Well, we'll be keeping a close eye on these developments and bringing you updates as more information becomes available. In the meantime, it's clear that the crypto landscape is shifting rapidly, and we're excited to see what the future holds.
Absolutely, and we'll be back with more news and analysis after this break.
As we wrap up today's show, I want to revisit a story we touched on earlier, the so-called Christmas tree funding bill in Congress that includes a few gifts for the crypto industry.
That's right. This 1547-page bill is primarily aimed at averting a government shutdown. But it also contains a crypto initiative that has flown under the radar. The Deploying American Blockchain provision could have significant implications for the industry.
I think this is a great example of how crypto is becoming increasingly intertwined with traditional politics and policymaking. We've seen a lot of regulatory focus on the industry this year, And it's likely that trend will continue into 2025.
Absolutely. And it's not just regulators who are taking notice of crypto. We're also seeing major players in the industry take steps to address some of the biggest challenges facing the space. Take, for example, Chainalysis's acquisition of blockchain security firm Hexagate.
That's a great point. With the surge in crypto hacks this year, security has become a top priority for many investors and institutions. Chainalysis's move to acquire Hexagate is a clear indication that the industry is taking steps to prevent these types of attacks.
And it's not just about preventing hacks, it's also about building trust and confidence in the industry as a whole. As we've discussed on the show before, institutional adoption is a key driver of growth in crypto, and security is a major factor in that adoption.
So, what are the key takeaways from today's stories? For one, it's clear that crypto is becoming increasingly mainstream, with policymakers and major players taking notice. It's also clear that security is a top priority for the industry, and we can expect to see more moves like Chainalysis's acquisition of Hexagate in the future.
And in terms of market outlook, I think we can expect to see some volatility in the short term, particularly as we head into the holiday season. However, long term, I'm bullish on the industry's prospects, particularly as we see more institutional adoption and regulatory clarity.
That's all for today's show. Thanks for tuning in, and we'll be back tomorrow with more crypto news and analysis.
And don't forget to follow us on social media for the latest updates and behind-the-scenes insights into the world of crypto. Until next time, stay informed and stay ahead of the curve.